Now then, welcome back to Dividend Growth UK. I'm David. In my first video, I showed you my ISA portfolio value, but I didn't go through every single holding, but today I will. I'm going to show you every stock, every fund, every position in my 165,000 ISA portfolio. 21 different holdings across UK stocks, international stocks, REITs, covered call ETFs, and income funds. This is the complete breakdown, what I own, how much of each, and why. Let's crack on. So, as of today, my ISA is worth £165,638. That's invested capital of £144,898 with a total gain of £16,983. And that is an 11.72% overall gain. I've maxed out my ISA allowance of 20,000. You can see zero remaining allowance. And I've also got £3,756 in cash sitting in the account right now, which I'll be deploying over the next coming months. 21 holdings in total. Let me take you through them, starting with the biggest positions. So the first one, Phoenix Group, 24% gain. My biggest holding, Phoenix, is the UK's largest life insurance and pensions consolidator. And so far I've collected over £1,200 in dividend income. Book cost at £18,700. I'm up over 4.5 on this position. Second up, BP, £14,449. 22.5% gain. BP is one of the world's oil majors. Big UK dividend player, currently yielding around 4 to 5%. I bought BP for the dividend income and because energy is a sector I want exposure to in my income portfolio. Book cost of £11,791, up at about £2,600. With a dividend income of £1,900. British American Tobacco, £13,347, 43.5% gain. BAT is a global tobacco and nicotine company. Cigarettes, vaping products, nicotine pouches. Yes, it's a controversial stock, but it's a dividend machine and it yields between 8 and 9%. Tobacco stocks are cash cows with stable cash flows and high yields. That's why it's in my ISA. Personally, I don't think people's desire for nicotine is going away anytime soon. Book cost, £9,297, and I'm up over 4,000. My best performing position, percentage-wise, and dividend income of £1,872. Next up, Legal and General, £12,685. 1.8% gain to UK financial services giant, pensions, insurance, asset management. Solid dividend payer, yielding around 8 to 9%. Similar to Phoenix in some ways, UK financial services focused on long-term savings and retirement. Book cost of £12,400. Small gain so far, but I'm holding it for the income, and that income so far has been £2,600. Rio Tinto, £12,354, a 31.5% gain. Rio Tinto is one of the world's largest mining companies, iron ore, copper, aluminium. Dividend yield between 6 and 7%. I wanted exposure to commodities and resources, and Rio is a blue chip way to get that. Book cost £9,396, up nearly £3,000, with a dividend income so far of £1,400. Next up, Sainsbury's, £12,070, 38.75% gain. Sainsbury's is one of the UK's largest supermarket chains. Defensive sector, reliable dividend, and yielding between 5 and 6%. People need to buy groceries regardless of the economy, and that's why I like it. Book cost of £8,800 and up over £3,200. Dividend income, £2,300. M&G, £10,790, 46.4% gain. M&G is a UK asset manager and savings business, spun out of Prudential a few years ago. High dividend yield, around 9 to 10%. Another financial services player focused on wealth and asset management. Book cost, £7,372, and I'm up about £3,400 with a dividend income of £1,800. Aviva, £9,545, 41.6% gain, and Aviva is a major UK insurance company, life insurance, general insurance, pensions. It yields between 7 and 8%. Similar theme here, UK financial services, strong dividends, mature business model. Book cost, £6,742, nearly £2,800, dividend income of £1,000. XYLP, S&P 500 covered call ETF, £8,054, and a tiny gain on this one. This is one of my covered call ETFs. I explained this in my earlier videos. These are cash parking positions while I deploy capital. It yields over 10%, generates monthly income, but it's not a long-term hold for me. Book cost £8,032, and it's basically flat. But the yield is why I love it. 2 months of income so far, totaling £97. Next covered call, QYLP. Now this is the Nasdaq 100 covered call version. Currently holding 7,948, and I'm at a loss, negative 1.2%. Same purpose as XYLP. High dividend yield, 11%. Monthly income, temporary holding. I'm gradually selling these down as I deploy capital in the dividend stocks. Book cost, £8,047. Slightly down, but again, it's about the income while I'm building positions. 3 dividend payments received so far for this one, totaling £220. Greencoat Wind, £6,833. Now, I'm at a loss with this one of 35%. UK Renewable Energy Infrastructure Fund owns wind farms, pays dividends from electricity generated. This one's been a tough hold, down significantly from a book cost of £10,529, but I'm holding it for the yield, which is around 7%, on the long-term infrastructure theme. Dividends received on this one so far, £1,600. Diversified Energy Company, £6,722. Another loss, and this one stings as well, negative 36%. US-listed oil and gas company focused on mature, declining wells. Another one that's down and down significantly. Book cost £10,500, and it's now worth £6,700. High yield in the double digits, but the share price has been brutal. Dividend income so far, £1,500. FEPI, 5,851, another covered call. Yields around 27%. Yep, 27%. Same strategy, cash parking while deploying capital. Not a permanent hold. Book cost, £4,990. So far, I've had 2 payments totaling £207. Next up, Persimmon, £5,056. And this is also at a loss, 13.7% loss to be precise. UK house builder, dividend player on the UK housing market. Down from book cost of £5,859, house builders have been weak recently, but it yields between 8 and 9%, and if they maintain the dividend, then I'm happy. Dividend income so far, £650. Next up, CVC Income Growth, £3,878. This one, 5.3% loss. CVC is a private equity income fund, invests in private equity and distributes income to shareholders. Book cost, £4,091. Slight loss, but the yield is between 9 and 10%. Pre-tax big box, £3,597, 11.8% gain. It's a UK logistics real estate investment trust. Owns big warehouses and distribution centres. Book cost £3,217, and I'm up about £380. This yields between 5 and 6%. It's a logistics REIT, benefits from e-commerce growth. £82 in total dividend income so far. Vodafone, £2,947, and I've had a 50% gain on Vodafone. Vodafone, the telecoms giant. This is one of my older holdings. Book cost £1,967, up nearly £1,000. Bit of a solid gain, I think you'll agree. This yields between 6 and 7%. Telecom sector, and so far I've had £170 in dividend income. Supermarket income rate, £2,329, 3.6% gain. Again, another UK REIT that owns supermarket properties and leases them to the likes of Tesco's and Sainsbury's. Book cost £2,248 with a very small gain. It yields around 6%, and it's a defensive property player. It was a new acquisition in my ISA in 2025, and so far only £34 in dividend income, but I have had only 2 payments. Invesco Bond Income Plus, £1,806. Bond Income Fund, Diversified Bond Portfolio Generation Income. Book cost £1,795, but it's basically flat. Low risk, steady income, yielding around 5%. So far, £49 in dividend income. Next up, Man High Yield Opportunities Fund. High Yield Bond Fund managed by Man Group. Book cost £1,520, with a gain hardly worth the mention. Yields are around 6 to 7%, and it's another income-focused fund. £73 in dividend income and a monthly pair. Lastly, I've got £3,756 in cash waiting to be deployed. Now, Interactive Investor pays 2% on cash, but I'm not interested in that. I invest £1,600 per month across the 20 stocks, so that will take me up to April and the new financial year nicely. So that's all 20 holdings. And what are the themes here? Heavy UK focused. Most of my holdings are UK listed companies. Phoenix, BP, British American Tobacco, Legal & General, Sainsbury's, M&G, Aviva, etc., etc. I'm based in the UK and I understand these businesses, and there's no currency risk. Secondly, income over growth. This ISA is all about dividend income. Every holding here is chosen for its yield. I'm not chasing Tesla or Apple. I don't get it right all the time. Greencoat Wind, Diversified Energy, Persimmon. These I've heard, but I'm not selling. They still pay dividends at good yields. I might not continue to invest in fallen stocks. Not every position works, and that's investing, I'm afraid to say. In terms of position sizing, you can see I'm fairly diverse across 20 holdings. My biggest position is Phoenix at 23,000, BP, British American Tobacco, Legal & General, Rio Tinto. These make up around 76,000, roughly 47% of my portfolio, and the rest is spread across smaller positions. So what's next? Going forward, I'll be looking closer at individual holdings, working my way through the portfolio. I'll also be sharing monthly updates as I deploy that £3,700 in cash. So that's my complete ISA portfolio, £165,600 across 20 holdings. And if you want to follow along as I build this, then please subscribe. In my next video, I'll be back with my February dividend income report. So thanks for watching, and I'll see you in the next one. Bye bye now.